All right. So if you're given this kind of a question, a very easy question, I'll be able to share this with you later. We are told here question number 1, Wingu Limited. What does it have here? Manufactures and sells blankets and has the following costs and the selling price structure. The selling price has been given as 1,200. We can see what is happening here. We are told the fixed overhead absorption rate is based on the budgeted activity level of 5,000 units per month. Assume that fixed overheads are incurred evenly each period. Budgeted sales for next month amounted to 3,500 units. They want us to give them the break-even point. I think we read this question. Ala, hii tulifanya kusema ukweli. Then that takes me straight away to question number 2. The online students, are they able to confirm that this question was done in our last class? The online students, are they able to confirm that this question was done in the last class? Yes. So then before I introduce the other ROI and residual income and what we call EVA in my today's class, let's just finish this concept by looking at question number 2. Jeffy Limited has the following, has been manufacturing. Question 2. Jeffy Limited has been manufacturing and selling 3 textile products. The following details are available for each of the 3 products. We have cotton, linen, and polyester. Direct materials are given, direct labor, variable production overheads, fixed production overheads. Total cost per unit is given there, and the selling price is 1,600 for cotton, 1,340 for linen, polyester 1,300. And then they have given us, ladies and gentlemen, the net profit for each. And then at the end of the day, they're giving us budgeted annual demand. Additional information. Each direct labor hour is charged at 120 for cotton, shillings 120 for linen, and shillings 70 for polyester. The direct labor force is threatening to go on strike for 2 weeks. This means that only 10,100 hours will be available for production rather than the expected 20,200 hours. If the strike goes ahead as planned, advise the management of Jeffy Limited on the optimum, on the products that should be produced if profits are to be what here, somebody? To be maximized. So give me a title there. Key limiting factor. Key limiting factor. Give me a title there. Key limiting factor. Key limiting factor. Give me a title there. Key limiting factor. Key limiting factor. Key limiting factor. So this key limiting factor, ladies and gentlemen, when we talk of key limiting factor, what comes to our mind? Is there anybody who is able to tell us whenever they hear about key limiting factor, what comes to their minds? What's a key limiting factor? A key limiting factor is a scarce resource that prevents a farm from exploiting maximum demand. So in this case here, tell us there that key limiting factor, key limiting factor. Very popular with your examiner. 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 Now, a key limiting factor is a scarce resource. This is a scarce resource. This is a scarce resource. This is a scarce resource that prevents a farm, that prevents a farm from producing the maximum number of units demanded, from producing the maximum number of units demanded. number of units demanded. Number of units demanded. Number of units done what year? Demanded, full stop. So anytime you hear about limitation, key limiting factor, it will be that scarce resource that prevents an organization from achieving its highest, from producing the very highest demanded number of what here, somebody units. If we get a question that has got a limiting factor, what basic steps shall we be looking at? The basic steps that we shall be looking at, ladies and gentlemen, basic steps. So the very basic steps you're writing there, very basic steps, and I shall be needing this in my calculations. Number one, you determine contribution margin. You determine contribution margin. Our CM. Is there any good student who is able to remind Mwalimu the formula of getting CM? Please talk to me. It is selling price minus variable cost. Price minus VC. Thank you so much. That is the first step. And then step number two, my good students here, is that you shall be able to ascertain the key factor units, for each product. The key factor units for each product. The key factor units for each product. Full stop. Full stop. Number three, you determine the CM per unit of the key factor. CM per unit of what here? Key factor. So you give us the quotient between number one and number two. You divide number one and number two like that. Yeah, you divide. Now, ladies and gentlemen, from there, you shall be able to go to number four. So number four, what are we doing there? Number four, ladies and gentlemen, what we are doing is to rank the products, on the basis of three above. On the basis of three above. Rank the products on the basis of what here? Three above. And then number five, lastly, is that you get to prepare the optimal production schedule. You prepare the optimal production schedule. You prepare the optimal production schedule. Now, this question that I've just read here, ladies and gentlemen, were you able to appreciate that it has got scarcity in it? That has got some shortage in it? And if yes, it makes you think that the question itself has some shortage, some limitation of some resource in it. What makes you, in this case here, think so? So we can see here, in the additional information, we are told each direct labor hour is charged at shillings 120 for cotton, shillings 120 for linen, and shillings 70 for what? Somebody? Polyester. This is where scarcity now comes. The direct labor force is what? Somebody? They are threatening to go on strike for 2 weeks. This means, remember, initially we had 20,200 hours if these guys here don't go on strike. But should they go on strike? We are told, should they go on strike? It means that, this means that only 10,100 hours will be available. So then we will not be able to produce up to our full potential, up to the budgeted, demanded units there. So this is a question of limitation. And the moment I've been able to see the limit, then those particular steps that I've given you shall apply. So the very first thing that I would expect you to do is to come and give me, ladies and gentlemen, the contribution margin. So give me the contribution margin. I'll be able to share this handout with you, don't worry. So come here and give Mwalimu the contribution margin for each product here. So abracadabra, what do we have here? Ladies and gentlemen, what do we have here? Abracadabra. What do we have here? So what we have here, they want me to give them contribution margin for what somebody for each product here. How do we get this contribution margin? How do we get this contribution? What here? Contribution margin. How do we get? So to get this contribution margin, ladies and gentlemen, we know the formula. It is selling price minus what here? Variable cost. Now, you great students of mine, of course, you can see selling prices, right? How about variable cost per unit? Who is able to calculate this variable cost per unit for me for the first product? So for the first product, what do we have there? For the first product, ladies and gentlemen, what do we have here? So for the first product, we have cotton, isn't it? So then for cotton, how much is the variable cost per unit? 180. 980. Very good. Student is telling me, Mwalimu, don't look far away. We shall be able to calculate this variable cost per unit for cotton. They have been able to calculate very well because they know that variable cost is DM plus DL plus any variable production overhead, isn't it? Yeah. If you look at this very keenly, you'll be able to see for cotton, we have 350 as direct materials, isn't it? Direct labor is what here, somebody? 480. Variable production overhead is what here, somebody? Is when you add the three, how much are we getting? But I'm so sure there must be a very great student here who can see that, Mwalimu, the moment you have given me total cost, to get, in this case here, variable cost, I don't have to go the long way. If you give me total cost, just come and take away what? You take away fixed cost, and you'll be able to get variable cost. So if you take away 1280 minus 300, which is our fixed cost, are we getting the same answer the sister gave us? No, most of them haven't yet seen. The online students have not seen. They have not seen that shortcut. These online students have not seen. Yeah, they have not seen the shortcut, right? So then I want you to do me a favor. I'm 100% sure that now you great students here can very, very easily come here and give me what here, somebody can very easily come here and give me, yeah, they can very easily come here and give me the contribution margins. That one I know. That one I know you can easily do it. That one I know you can easily, very, very well do this. Yeah, great. So I want us to calculate, ladies and gentlemen, the contribution what here, the contribution margins very, very fast. How do we, so step number one. So step number one, we are getting contribution margin, which is price minus what here, somebody variable cost. Now we are doing this in a columnar form. So in a columnar form, ladies and gentlemen, what do we have here at the end of the day? In columnar form, this is what we have here at the end of the day. We have our three products. Do you remember their names? The first one is what here, somebody? Cotton. The second one is what here, somebody? Linen. The second one is linen. So we have here the famous linen. And then lastly, we have what here, somebody? The polyester, isn't it? Lastly, we have the polyester. We shall overcome, don't worry. Lastly, we have the polyester like that. Lastly, we have the polyester like that. Great. The polyester like that. So we have cotton, linen, polyester. Cotton, linen, and polyester. So give me the prices. As I suppose somebody may have written the prices down. None wrote it down. 1600, eh? The first one, I'm told in this case here, is disabled annotation for others. The first one, I'm being told that the cotton is 1600. How about price for linen? The online students must have captured. The online students in this case here may have captured before I share them. 1600, 1340, 1300, isn't it? So when these students were seeing these things, where were you guys? We shall overcome. We shall overcome. So 1340, and then what here, somebody? 1300. The variable cost, I suppose, now you guys were able to get that one, all of you. You may not have gotten all the others, but you know the first one is 900 and what? 980. The first one is 980 here. How about the second one? The online guys must be having the second figure, right? But fortunately, all of us have known how to calculate, right? So I can simply post this. Which question, Maggie, I'll be able to project it. So the second one, Emily tells me that this was 720. How about the third one? Emily finished the business. The third one, Emily, the variable cost, the third one, I'm being told is 670. 670. Now I can project the question, isn't it? Now I can project the question. I must be disturbing this lady called Marion. Yeah. So before I project the question, are you at a position of giving me the contribution margins? 620. So this one here is 620. And today I'll be able to give you an exam, Yeah, a speed test. Speed test. 1340 minus 720 gives me what figure? Somebody here? 620, yeah? And then the very last one here, 630. So 630, the very last one here, I'm being told, Mwalimu, so this is 6, why is it refusing? This is 620, we shall overcome. So this 620, and then 630, thank you very much. Let me now project the question. When I project the question, be very, very keen to see everything, right? Yeah, now I'm projecting the question. Now this is the question. Yeah, this is the question. So this question, ladies and gentlemen, so big. Great. So in this question, they were able to give me the variable cost per unit. We have the selling prices provided here, isn't it? So we have been able to get in the process the contribution. What here? Somebody margin. That is step number 1 done. What was step 2 about? Yeah, the scarce resource you. So do we know the scarce resource? In most cases, the scarce resource could be labor or machine. So it's either labor hours or machine hours. Yeah. So in this case here, what is going to be scarce? Ni labor, because machine is in a strike. So ni labor, isn't it? So then I want you to give me the labor hours needed for each of our 3 types of what here? Products. So labor hours. So please read somewhere here. You give me the labor hours. Not labor cost. Not labor cost. But labor what here? Labor hours. So please give me the labor hours. Please give me the labor what here? The labor hours. Please give me the labor hours. The first one is 120, isn't it? The second one, 120, right? The third one is what here, somebody? But now, ladies and gentlemen, you are management. You're not just any other people outside here. You are management accountants. I want hours that you're giving me shillings. I want hours. You are management accountants. You're not historians here. I calm down, right? So let me calm down, ladies and gentlemen. So in this case here, you're right. You're very right. You can see direct labor. Now, these, of course, are shillings, isn't it? For 80 to 40 to 10. So do your abracadabra. Tell me, how many hours do I need to produce cotton? 4 hours. Great. You should get my present today. You should get my present today. This lady was the first to shout 4 hours. Amepata je 4 hours abracadabra? Yeah, because we know that each hour we are paying how much here for cotton? 120. So when we pay for 80, we have bought how many hours in total? 4. Because you see shillings, 120 equals 1 hour. Then shillings for 80 will be what here? For 80 divided by 120. Wanafunzi online walikuwa wanasema aje? Wanafunzi online abracadabra. Iko mwingine aliniambia nimchezee video tena leo. Ni kama walipenda ile video last class sana. Leo sina video ya kuchezea. Yeah. So for 80 divided by 120, right? So, ladies and gentlemen, they are telling me something very nice. So then are you able to get those labor hours for each of the products? We said you give us the scarce resource units for each of the products. For each of the products. So we have, ladies and gentlemen, we have in this case here, the 480 divided by 120, 240 divided by what here, somebody? When it comes to polyester, the rate of workers is different. It will be 210 divided by 70. So when I share my board here, nikiuliza kama mnakumbuka figures, msikasema mmesahau. Mkisema mkisahau nawapiga fine. Na fine yangu ni rahisi sana tawaambia. So second step, ladies and gentlemen, come and identify the scarce, what we call the key limiting what here? Key limiting factor, which in this case here is the labor hours. So labor hours, I know you have the 480 divided by 120. So this one here gave us what here, somebody? 4. How about labor hours for linen? 3. How about labor hours for... Oh, this is 2, eh? Wanasema this is 2, right? And then what here, somebody? 3. So all of us, are we able to see where those labor hours came from? Oh, yeah. I hope even the online students, they are comfortable with where we got those labor hours from. Now, ladies and gentlemen, the moment we have been able to get this, then what are we going to do next? Step number 3. The CM over what here, somebody? Over the limiting factor, isn't it? Over the limiting factor. Over the CM per limiting factor. Are you able to give me this figure? Abracadabra. Are they able to give me this figure? So come here and give me the CM per limiting factor, or CM per labor hour in this case. In this case, CM per labor hour. So say 620 divided by 4. So you are dividing this. And the physical students are telling me, Mwalimu, this is pretty easy. The first one will be 155. And then we have 620 divided by 2, which gives me what figure, somebody here? 310. Kamele mbegu ya Kanyari. 630 divided by 3. 210. Hii ndio Kanyari. Akanyari ya kusema 210 wewe. Kanyari ni wa 310. Hata kama mmesijui vizuri. Si yake 310. Sio 210. So then we've been able to get this CM per labor hour. What should be the next thing to be done? I can't hear your chorus. Yeah, we rank them, isn't it? You know, ladies and gentlemen, you may forget about many other things, but when it comes to choruses, hata mimi nakumbuka siku moja nilienda, iko wanafunzi waliniambia, mwalimu, tupita mtihani kuja hapa kula kanyama. Sasa wanafunzi wakanipeleka wapi ile? Nimesahau, iko mahali hapa Thika Road. Nimesahau hiyo club inaitwa namna gani? International Disaster. Quivers, yes. So Quivers siku anashika wimbo. Nyimbo zenu tofauti sana na zetu, Zetu ni tofauti sana. Very, very different. Zetu miaka yetu ilikuwa wimbo ambao ina make sense sana. So zenu mingi siku nasikia ziki make sense, lakini kuna moja ambayo ili make sense sana. Mpaka sasa nakumbuka chorus. Chorus ilikuwa inasema, ati hizi pesa niko nazo ni za babako, kasikia vibaya wapi? Hiyo nilisikia ikiwa na message sana, hiyo wimbo hiyo. Hiyo ilikuwa na message sana. Hiyo mtu anapata akili mzuri hizi patina pesa. Ati pesa niko nayo ni ya nani? Ni ya babako. Kasikia vibaya wapi? So na imagine kama ni kijana wangu akija baadaye anaambiwa na mlezi international design. So chorus ufai kusahau chorus. So after getting the CM per scarce resource, the next thing in this case we should do is to do what here, somebody is to rank. Yes, the physical students wameshapata correct. Online unasema online wananichekelea. Na mnipeleke hiyo huko tena siku nyingine tafadhali nisikie wimbo. Yeah, hiyo nisikie ikiwa mzuri sana. Very good. Nisikie ikiwa mzuri sana hiyo. So then we come here and do what here, somebody, we come here and rank. Yes. So then are you able to rank, ladies and gentlemen, on my behalf here? Are you able to rank their, let's see where they can rank on their own. Let's see where they can rank on their own. So when we come here, we are ranking, ladies and gentlemen. Remember, the higher the better, isn't it? The higher the better. So the 310 ticks number 1. So this becomes number 1. Number 2 ni gani, somebody? Poly, 210. Alafu in this case here, content inakula namba ngapi? Inakula number 3. So that is ranking. Then the last step now is that you shall be able to come and give us what here? The production schedule. Yeah, you call it the optimal production schedule. So give us the optimal production schedule. So give us the optimal production schedule. So please feel free to ask questions. Feel free to make contributions. Yeah. So come here and give us the optimal production schedule. The optimal production schedule, you underline like that. So give us a column here for products. Give us a column for products here. So do you remember our products? The first one is Wongo, as per the rankings now. As per the rankings. The one that has been ranked number 1 is what here, somebody? Linen. Followed by what here, somebody? Polyester, poly. And then lastly, we have what here, somebody? Cotton. So let's define our ceiling. Our ceiling is the maximum demand. Maximum demand. Maximum DD. Andika in full. This is maximum who? Demand. So maximum demand. So are you able to see the maximum number of units that were demanded, ladies and gentlemen? Let me share the question. Let me share the question. So the question that I'm sharing here, ladies and gentlemen, will be able to give you the number of units that were demanded. So the number of units that were demanded are here. Number of units demanded ya kwanza ni gani? 24 and not 1600. Now you're very, very bright. Yeah, because unaanza na the first ranked product, which was what here somebody? Linen. So the first demand is 2400. The second demand is what here somebody? 3000. Alafu 1600. So that is what we are going to do. So I stop sharing here. Abracadabra. I stop sharing there. And then I pick my whiteboard. Yeah. So stop share. Inafikiria pole pole. Yeah, great. So from there, then I'll be able to pick my whiteboard like this. Very good. So then you guys are giving me those demanded, maximum demanded units, the budgeted demand. Linen, you gave me a figure of what here, somebody? 2400. 2400. How about poly? 3000. Cotton? 1600. Aya, sasa nawauliza, when you are budgeting to produce this maximum demanded units, nini nakushtua? Ama management accountant hastukangi na kitu yoyote? Nini nakushtua? The scarce resource. The scarce resource nakushtua sana. The scarce resource. So ile kitu ambayo inanistua saa hizi ni hiyo kitu ambayo inaitwa limiting what here somebody? Limiting factor. Hiyo ndio mimi inanistua sana. Limiting factor ndio inanistua sana hiyo. Limiting factor. Aha. So limiting factor hiyo ndio inanistua kweli kweli. So kuja hapa straight away. So limiting factor hiyo ndio mimi inapatia mimi wasiwasi. So limiting factor, ladies and gentlemen, in this particular case, the limiting factor, what is it? It is what here somebody? It is the labor hours. It is the labor hours here. It is the labor hours. It is the labor hours. So labor hours, what do we have here for labor hours? So for labor hours, my good students, labor hours, nope. We shall overcome. We shall properly. So for labor hours, so we have here our labor hours. We have here our labor hours. So we have here our labor hours. So labor hours, I'm interested in getting the total. But do we know how many hours each linen clothing needs? Linen clothing, ladies and gentlemen, how many hours we need for the linen? We are given somewhere here. We can see the labor hours, isn't it? Linen are how many? 2. Poly are how many hours? 3. And then cotton 4 like that. So you come back here, my good students, we can come and comfortably say that linen, it will be times what here somebody? Because 2 is per clothing. So if I'm doing 2400, that will be it. Poly, you've just told me poly is how many hours here per clothing? 3. And then in this case here, cotton, how many hours? Cotton is 4 hours, isn't it? So come here and say equals. So the first one will be 4,000. What here, somebody? 800. The second one will be 9,000. 9,000. Thank you so much. And then now we have the last one, which is what here, somebody? 6,400. So then how many hours do we require in total? How many hours do we require? How many hours do we? Please add up all of them. 2,200, isn't it? 2,200. Thank you so much. So in this case here, total hours required. Total hours required. So number in 20, what here, somebody? 200. But in this case here, how many do we have which are available? 10,100. Sababu wajamaa under strike, kama Wakenya Highways under strike, they reduce our available hours. So hours available. Hours available. So the hours are available, ladies and gentlemen, they are 10 what here, somebody? They are 10 100. So then can you kindly give me an advice here? Please talk to me. What do you think is going to happen? What do you think is going to happen here? What do you think is going to happen here? You've taken, in this case here, some big trolley. Yeah. During those old days when Nakumat was Nakumat, when they used to tell us that if you did it, yeah. Yeah, great. So you have a big trolley. Pako umepembeleza mtoto. Pako ukaweka mtoto kwa trolley juu jamani umpeleka round kwa supermarket. Umeenda ukajaza vitu kwa trolley. Yeah. So umefika pale kwa cashier anakuambia you need 20,200. Mbele nyuma ukiangalia kuna pesa ngapi? 10,100. What will you do? Yeah. Ama unafuliza. Unatoa vitu. Lakini kukasa ule mtu alichagua. Na huyo mtu ako 3 years atapiga nduru kweli kweli kwa supermarket. International disaster. So anyway, lazima utatoa, isn't it? Yeah, zile mpaka pesa zako zifi. So tukianza kutoa, utatoa ile the most needed one. Utatoa the most important one. Unaanza kutoa kwa ile least ranked. The one that is least ranked. Hapo unaanza kungoa. Unasema iturudishe kwa shelf. So first of all, give me, ladies and gentlemen, give me here. First of all, give me, yeah. So first of all, give me, in this case here. So first of all, I want you to give me the deficit. Give me the deficit. Yeah. So come here and give me the deficit hours. I love this. So come here and give me the deficit hours. So when you subtract this, we are missing how much here, somebody? 10,100. And then now you recover this deficit from the products. And you start from the worst ranked, the very last product. This last product, I can comfortably take away how many? I can comfortably take all of them, isn't it? But after deducting 6,400, I've not covered the deficit. What is the balance? Can someone tell me 10,100 minus 3,700? So this 3,700, what do we do with it? We keep on moving up, isn't it? So we come and deduct these from this second ranked product, which fortunately can cover, I mean, you see 9,000 can cover the entire 3,700. Yeah. So then what does this mean, ladies and gentlemen? If you subtract, it means that the number of hours we can now put to poly are how many? 5,300. The number of hours you can now put to poly, we have 5,300. So poly, we can only put 5,300. So poly, nope. Why are you jumping, you? Poly, we can only, ladies and gentlemen, for poly, we can only put up how many? We can only, in this case here, take to poly. We can only, in this case here, take how many hours there? 5,300. 5,300. Yeah. And then, of course, in this case here, this other one here is what here? Is 0. Is 0. So limiting factor, labor hours that we can easily put into this production. Already now we have the hours. For linen, we are not going to reduce anything. For linen, the very best ranked product, we're going to leave it intactly with 4,800 hours. But for poly, we have squeezed down the hours a little bit. For cotton, 0, 0, isn't it? Then give me the very last column, optimal production. Optimal production. Optimal production. How many units then are we going to produce? We know for sure that we cannot produce these demanded units. We know for sure that these demanded units, in this case, some of them, you must return them back to the shelves. So can you kindly guide me? For the very first ranked product, this one I know. I never reduced hours at all. This one I know that I will be producing how many units here, somebody? 24. Actually, it's 2,400, isn't it? William alone. It is 2,400, isn't it? So this one I know I'm going to produce 2,400. How about poly? Wanafunzi wangu online wanasema namna gani? Poly to produce 3,000 kweli? Ngoja kidogo. Wanafunzi wangu online wanasemaje? Wanafunzi online wanasemaje? MK 1767. Mmedu nini ndio mpate 1767? Total number of hours divided by. Let me hear from my own. I can't. You guys, most of you, your silence is deafening. Your silence is deafening. Even the online guys are not telling me how. Great. I can now learn from Charity. Now, ladies and gentlemen, please listen. And please listen to me very carefully. You know, these labor hours, yeah, you are multiplying in this case to get the total. So when it comes to optimal production, you take the hours we have here, you divide by this. So for this column to be obtained, you shall take whatever you have here, you do the division by this. So this one you divide by 2. This one you divide by what here, somebody? By 3. This one you divide by what here, somebody? By 4. So forward you multiply. And then now backward you shall do what here, somebody shall divide. So 4,800 divided by 2, this gave me 2,400. How about 5,300 divided by 3? You've already given me an answer of what here, somebody? 1767. So here we have 1767, like that. And then the last one, of course, is what here? Is 0. The very last one, we are being told, is 0. The very last one, we are being told, is what here? Is 0. So the moment you have reached here, you've done the necessary work that you are needed by the examiner to do. And that will be it. No, don't add because they are not children of the same feather, isn't it? Ni kama uchukue kondoo uongeze na mbuzi. Yeah. Not unless you convert this to money. Yeah. So that is what we are required to do by the examiner. Every time they bring this question, and then you happen to get it wrong, for sure, it means that I will be able to teach you again next semester advanced management accounting, which will be very unfortunate. So this is normally a savior question. When you see this kind of a question, start with it, get all the marks, get 20 over 20. Once you get 20 over 20, then how many marks will you be looking for in the other questions to pass? 30, no. The pass mark is never 50. That is what KNEC tells you. If it was 50, most of you would not have passed FM last semester. Even company law, would have you gotten 50? Somebody who tried company law here last semester? Was it easy? Then you must be a genius. People cried last semester. Yeah. People cried last semester. Yes. People cried. It was crazy. Yeah. Yeah. Even FR was crazy, but you passed, isn't it? Did you get 50? Be very honest. So it is not that easy. Getting 50 in these KNEC exams is not very, very easy. So the pass mark of these papers inakuanga chini sana. By the way, ukiona umeanguka tu exam ya KNEC, kama ukianguka, ujue in the entire paper you got a zero. Hukupata kitu yoyote. Yeah. It's like you got a zero. Because like now theory, we normally say sometimes when the exam is very tough, like FM last semester, so long as a student has written, even if you have written a dog is a dog, so long as you have some writing down there, we give you all the marks. So we are very, very fair. It's all that students in this case are not keen enough. They're not keen enough. Not that they're not keen enough. They are good. But again, most of them, they tend to panic a lot. KNEC, I don't know what it comes up with. When these students are given a paper, I don't know whether it is the color or the smell. Yeah, people start sweating. Just for nothing, isn't it? This is an exam just like any other thing. Very easy. If I pass, fine. If I fail, so what? That should be the attitude, isn't it? Yeah. So because I know you are great management accountants, I want you to do me a favor. Please give me the profit statement. If we do this optimal production, how much profit shall we make as a company? You are a management accountant who is being paid over 500,000 Kenya shillings a month. So let's see. So now you are giving me the profit. Now you are giving me the profit. Abracadabra. They are now giving me the profit. I repeat, okay? Mwalimu, kindly repeat. Sorry for that. I need to repeat something. Yeah, I need to repeat something. Is it Zoom that disappeared? Yeah, I need to repeat something. Yeah. Let me come back. You see, ladies and gentlemen, how do we get this optimal? Now, listen, I'm repeating here, listen. You see, we have our products as per the ranks. Then we have the maximum demanded U. Then we ask ourselves a question. This maximum demanded units, if we were to produce these units, in this case here, what would have been the total labor hours? So we have the labor hours for each unit. So 2,400 times 2, 3,000 times 3, 1,600 times 4. So we have in this case here the limiting factor. We have the total labor hours. So then in this particular case, ladies and gentlemen, we realized that our total labor hours were how many? 2,200 required. What we needed are 20,200 hours. But how many of them are available? 10,100. When we subtract, we know the deficit, isn't it? The deficit is 10,100. So this deficit is what we went ahead to recover. We are doing a recovery from these products because now we don't have enough hours. So the recovery is normally done from the very last ranked product. So the last ranked product in this case here was able to give us how many hours here? Yeah, it needs 6,400. We don't have that. So in this case, we were able to deduct the entire 6,400. But you see, once I deduct the entire 6,400, I haven't exhausted the deficit. The deficit is 10,100. So I was able to take the 10,100 minus what I recovered from the last ranked product. I got 3,700. So I'm doing the recovery upwards. So this 3,700, I came and recovered this from 9,000, which gave me how many hours here? Somebody 5,300. So then we want now to convert these hours that we have into units. Fortunately, we know that 1 unit for linen, 1 unit is how many hours? 2 hours. How about 48 hours? So we divided, and I told you the very best way of getting this optimal production, like myself, I don't think when it reaches this point. I know that for maximum demand, I multiplied. To get optimal production, what will I do? I will take the labor hours now, which are here, which are available. I do what here, somebody here. We divide. So I divided by 2 here. I divided by 3 there. I divided by 4 like that. That's how we were able to get this 4,800 divided by 2 gave us 2,400. 5,300 divided by 3 gave us 17. What here, somebody? 67. And then 0 divided by 4 gave us what here? 0. So now our role is to go ahead and give our examiner the profit statement. So is there somebody who is able to give me this profit statement and tell me? Yeah, thank you so much. Winnie is asking about the fixed cost. Winnie, you must be a very good student, because Winnie has known that there is no way you'll be able to get this profit statement without what here, somebody? Yeah, without, in this case here, the fixed what here, without the fixed cost, isn't it? No way. There's no way. There is no way for sure. So ilikuwa 300. Oh, across. Fixed cost ilikuwa 300 across. So mwalimu badala kung'ang'ana na hii kitu yako ambayo utajua sana, naambiwa mwalimu hii kitu ilikuwa ni ngapi? Ati 300? Are you sure? You are sure? I doubt. Mina doubt sana. Mina doubt sana. Sababu ukiangalia vizuri kwa hii kitu hii, mina doubt sana. Sasa ninakataa sasa. All right. So in this case here, ladies and gentlemen, what are we told here about this fixed cost? That fixed cost in this case here was what here? Across. Where is that fixed cost? Fixed production overheads are what here, somebody? 300 across. Very good. But the 300 is per what? Per unit. And as we want fixed cost for the entire organization. So what do you think shall we do to be able to get fixed cost for the entire organization? I should have shared the screen, sorry. We multiply this by the number of units. So are you able to do that for me? Are you able to do that for me? Oh yeah, I'm alone. So you see, ladies and gentlemen, in this case here, we have our fixed production overheads per unit of 300, 300, 300 like that. But the 300 is for each unit. And yet I'm needed to get total fixed cost. So I'll take 300 times what? 300 times 2400. Then you add another 300 times 77. Then 300 times what here? If you are writing, please put a very, very big wrong in your book because it cannot work like that. Yeah. Because remember 300, the fixed cost should always be multiplied with our budgeted output and always assume to remain constant. Otherwise, if you start that quantity has changed and then you change fixed, then it will become variable cost. It will become variable cost. Fixed cost shall always be multiplied with budgeted activity, budgeted number of units. So the total fixed cost here will be, these are the budgeted units. It will be 300 times what here, somebody? 1600 plus 300 times 2400 plus 300 times 3000. Remember fixed cost, even if you're producing zero, like now in this room, if we get 0 students, shall we go to the landlord and tell the landlord on our knees that, you got 0 students, now you can't pay rent? He won't understand. Fixed cost is predetermined. You get it in advance, you get it using budgeted production. And once you've been able to get it using budgeted production, then that figure will never dance as the number of units here dances. Never. Never. So it will be 300 times 1600 plus 300 times 2400 plus 300 times 3000. So the online ninjas, are they able to follow? Have they been able to get? I share my screen, yeah. I thought it will be okay if you just, let me try to get this. Or I maximize it. Let me try to see what they're saying, these guys. Let me try to see what they're saying here. So I thought it will be okay if you just take the limited hours, 100, and divide with the first rank hours and make a decision as a unit to maximize profit. No. Pius, you haven't understood this concept very well. Pius is saying that we take the 100 which are available, then we divide by the 2, the first ranked hours. No, we're not producing one product. Yeah, it has to be an allocation. An allocation. It has to be an allocation. Yes. Yes. Okay. I love challenges. So like we take the very first one, we allocate all the resources needed to do what here somebody to produce the best ranked, isn't it? And then you go to the second one until you exhaust all of them. Until you exhaust all of them. Okay. Until we exhaust all that is what here available. Great. We have already thought of that. You see, at the end of the day, your examiner can give you like 5 products. And the shortage in most cases will only affect the last even the last product, you'll still have to produce something. So if you start from you'll be doing a lot of work. You rather just do it from, the last what here, the last round. So perhaps I could repeat here for you to see what I'm talking about. Prayers, yes. Thank you so much. We shall pray. It is 6. Tumesahau sana. Well, okay. We shall overcome. We shall overcome. Great. So we will come back at exactly 7:55. Thank you. And then, of course, when we come back, we expect all of you to have gotten the correct answers. Recording. Yes. So profit equals total contribution, which is CMX minus fixed cost. So already we have the excess, the quantities. Do we have the contribution margins? So for linen, already we had computed this, if you can remember very well up there, right? We have it. We have it somewhere. We have it, yeah. You can see in this case here, linen contribution margin is 620, isn't it? Poly is 630 and then 620 like that. Great. So, ladies and gentlemen, this is what we have here. So we have here, linen is 620, yeah? And then this one here is 630. And then lastly, 600 what here? 20. So come and give me a column of CMX, the total contribution. So remember, quantity is our X. So 2400 times 620, this gave us what figure? 1488,000. How about 77 times 630? 1113. 200. And then 0, isn't it? Then what is the total contribution? 2601 to 10,000. Then you come and less what here, somebody? Fixed cost. Because you want to use this formula that profit statement, profit equals total contribution minus fixed cost. What is the value of the fixed cost? 21,100,000. 2.1 million like that. And therefore our optimal or maximum profit equals how much here, somebody? 501 to 10,000 equal to, thank you so much. Is there somebody who was able to get this answer correctly? Great. How about the online ninjas? Were they able to give me very good kicks here? Online ninjas, what are they saying? We shall overcome. We shall overcome. Thank you so much. 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 Great. Now, in your past papers, 2.1 imetoka wapi? 2.1 ya wapi yo? The fixed cost, eh? 2.1 the fixed cost. Maybe we should be able to show them mali imetoka, eh? Yeah. 2.1 the fixed cost. Imetoka wapi? Let me show them. So this 2.1, this is where I got the 2.1 from. This is where I got the 2.1 from. Remember we said fixed cost is always based on budgeted output, budgeted demand. How do we get total fixed cost? It's from these fixed production overheads. Yeah, 300 times what here, somebody? 1600 plus 300 times 2400 plus 300 times 3,000. That's how we got the total fixed overheads. Is there anybody who has some other questions? Yeah, so that is what we are required to do to be able to get all the marks. Yeah, a good student is asking Mwalimu, why did you not subtract variable cost? Because you see here we have used here contribution margin, and the contribution margin is net of variable cost. Contribution margin is net of variable cost. Because how do we get contribution margin? We take selling price minus variable cost. So, my good student there, have you been able to understand that? If you wish, you can also do it the longer way, but you'll end up getting the same answer. The best is to use this approach where we are saying that profit is contribution per unit times number of units minus what here? Fixed cost. Not understood variable. Not understood variable cost. Not understood variable cost. Okay. Let me repeat here. No worries. That is why we are here. That's why we are here. Now, ladies and gentlemen, please listen and listen to me very, very well. When it comes to variable cost, what is variable cost? You see, variable cost is not the same as variable production overhead. Because you can see that's why this gentleman is confused here. He's saying that variable cost should be 150. No. Variable cost is any direct expenditure. Are you able to see direct expenses here? Yeah. I can see direct material, 350. I can see direct labor of what here, somebody for 80. So remember, we have three components of variable overheads, or rather variable cost. We have direct material plus direct labor plus VPO plus variable production overhead. So I don't know whether these students are calling themselves user, whether they're able, first of all, to understand that variable costs, we have any direct expenditure is a variable cost. Because by definition, variable costs are those costs which are directly related with output. So whenever you see the word direct, that means a variable cost. So then the variable cost, there are three of them. We have direct material 350, direct labor 480, variable production overhead. Overhead is the top one, the icing on the cake. It's variable as well. You add the three, you get your 980. It can't be 150. Let me see where they have now understood. Understood now. Very good. So kindly share the screen with the fixed cost working. Yeah, I'll be able to do that. What about fixed cost? Let's look at fixed cost. Let's look at fixed cost. Now, fixed cost, ladies and gentlemen, you can see up here, they are talking about what here? Fixed cost per unit. You can see here on top, fixed cost per unit like that. So like now per unit, we have 300 here. So this fixed cost, the mistake that students will always do is to see any new quantities given in between the question, and then they pick these 300 times new quantities. Fixed cost is always predetermined. From the very budget, you know that, for example, you're going to have 50 students, and then you say fixed cost per student is 10. So we'll say total fixed cost will be 10 times what here, somebody? 50 times that budgeted quantity. So should the students in this case here, for example, actual number of students here be 20, you can't say 10 times 20. Fixed cost will still remain 10 at 50. Fixed cost is always based on budgeted production or budgeted demand. How do we get total fixed cost for the farm? We know that the actual production units were changing. The actual production units were changing. That one we know. One of the products actually actual production was zero. Yeah, but remember, fixed cost cannot fluctuate as per the number of units that you actually produce. Fixed cost is always pegged on the assumed budgeted consumption. How did we get it? So this is per unit. So we took 300. We took this 300 times 1600 because this is for one unit times this 1600 demand plus 300 times 2400. 300 times 2400 plus 300 times 3000. That is how we got our total fixed cost, which will remain constant throughout. So I hope that is okay, ladies and gentlemen. And now you'll be able to give me the permission to move on. I hope that is okay. I hope now they are able to agree with me. Yeah, so great. So 300 times 1600 plus 300. Thank you so much. All right. Now we go to our past papers. We do two questions. Now we are looking at our ratios analysis. So this ratio analysis, I want us to look at only two of them today. That is a return on investment and residual income. Only two. Mwanafunzi anauliza, mwalimu niandike wapi? Hata ukiandika mbele ama nyuma, kitabu ni yako wewe, so long as you understand. So hakuna noma, hakuna worries, isn't it? Because ukianza kusema niandike, mwingine alishaandika kutoka mbele, sasa mtaanza kuwastua. Wewe andika mahali popote. The most important thing is that today we are looking at two ratios. Which ratios are these? Return on investment and residual income, isn't it? Return on investment and residual income. Once we understand those two ratios, then I will be counting myself very, very lucky. I'll be very, very lucky. I will say I am very lucky. You understand those two? Tafurahi sana. Huyu ameenda wapi? Nataka tumie concept ya contribution kujibu swali mzuri sana hapa. Yeah, August 2022. August 2022. Question number 1, dog. August 2022. No, question number 2A. Diamond division. August 2022. Question number 2A. August 2022. Question number 2A. Mukipata sema tumepata by saying yes. Great. Mshapata nyote kweli? I doubt. August 2022, question number 2A, swali ya Diamond na Mr. Nice, isn't it? August 2022? Yeah, August 2022, question number 2A. Wanafunzi wa online wameshapata kweli? Thank you so much. Already walishapata juzi hawa. Ni kama walijua na kuja kufanya swali, eh? Now, ladies and gentlemen, this was really an easy question that was performed so poorly in this sitting, so poorly. I've never known why students, you can fail in AFM. Even AFR at times, you can get a fail. But AMA, nobody should fail AMA. Not unless umeamuka ukiwa mgonjwa, siku ya mtihani. Bure. Aye. So what have they told us, ladies and gentlemen, there? The Diamond division of a retailing group has how many years remaining? 5 years remaining on a lease for premise in which it sells self-assembly furniture. The management is considering investing how much? On immediate improvements to the interior of the premises in order to stimulate sales by creating a more fascinating selling environment. We have the forecasted sales revenues there. They have told us there, number 2, the average contribution to sales ratio is expected to be how much here, somebody? 40%. The cost of capital is 16% on the net book value of the investment at the beginning of the year. At the end of the 5-year period, the premises improvements will have nil residual value. Depreciation is charged on a straight line basis. The Diamond division has a target return on capital employed of what percentage? 20%. So they want us to prepare a summary performance statement for the years 2022 to 2026, and they want us to start with residual what year? Income. Step number 1, calculate depreciation for me. Step number 1, calculate depreciation. Tukipata accountant awezi calculate depreciation here tonight, we shall call their employer tomorrow. Tumwambie uko na accountant bonoko. Akimwalimu mwongea mbaya. Lakini si straight line unajua kutafuta. Hiyo mimi najua utapata. 1, Mario na cheki na hizi vitu. Yeah, I can see. Are you sure umeshapata 120? Now, ladies and gentlemen, this is what I want us to do. This is what I want us to do. We know that depreciation per annum, in this case here, it will be equal to the initial cost, isn't it? So we have the initial cost minus who? Any scrap value, isn't it? Divided by what? Somebody number of years. Useful lifespan, isn't it? Yeah. So remember, leases nowadays, we capitalize them. They become part of our assets. We depreciate them, isn't it? Yeah. So the initial cost is how much here a year? Can we use 600 alone in terms of shillings, thousands? Itakuwa better hivyo, isn't it? So in terms of thousands. Minus scrap value, amesema ni 0. Divided by this lease is a lease of how many years? 5 years. That is how they were able to get what year, somebody? 120. So then I want you to give us what we call our investment at the beginning of each year. Our investment at the beginning of each year. At the beginning of each year. So this one here will be the same as the written down value. Nimeandika vibaya. This one here itakuwa namna gani woye? Woye, this one will be the same as the beginning written down value. Beginning written down value. Beginning written down value. Beginning written down value. Abracadabra, this life is nice. So you come here, ladies and gentlemen, beginning written down value. How many years do we have in total? Oh, yeah. 5, isn't it? So year 1, year 2, year 3, year 4, year what? Year somebody? Year 5. So at the very beginning of this list, we injected how much? 600. So beginning of year 1 ni 600. Kutoka hapo sasa unajua ukienda year 2, year 1 utakuwa umekula in terms of depreciation 120. So then at the beginning of year 2 utakuwa na ngapi? 480. Because itakuwa ni 600 minus what in this case here we ate 1, which gives me 480, isn't it? And remember this straight line, depreciation is equal. Depreciation is uniform every year. So tukija hapa year number 3, itakuwa what we had last time minus 120, giving me what figure somebody here? 360. Hii itakuwa ni 360 minus 120, giving me 240. At the beginning of year 5, itakuwa 240 minus 120, which gives me how much, ladies and gentlemen? Gives me 120. So ukifika paka hapo already umekula mark moja ama hata mbili, because kuna depreciation. Now from there, ladies and gentlemen, we want to do now what we call residual what year? Residual income. Is there anybody who could be knowing the formula of residual? It's like I've never given you the formula. It's like I've never given you the formula. Profit minus Coca-Cola. Yeah. Ni vile sina pesa. Aki ningekupatia pako Shanghai. Yes. Ningekupatia pako Shanghai. Yeah. Now tell us there that residual income measures profit. Measures profit after charging the cost of capital. Residual income measures what year? Profit after charging the cost of what year? Cost of capital. Is that okay? How do we get this residual income? Ladies and gentlemen, as you're telling me, to get residual income, of course, you have already told me. You've told me to get residual. Number 1, they want us to give them residual income. You should be able to give us profit minus what here, somebody? Cost of capital employed. If you're seeing this for the very first time, right there, COCA stands for cost of capital employed. COCA stands for cost of capital, done what here, somebody? Employed. Cost of capital employed. Cost of capital employed. So then how do we get this cost of capital employed? In this case here, it will be profit, and then you take our cost of capital given, times our opening, written down value is our capital employed. So you take the profit, you subtract the cost of capital done what here, somebody? Employed. Cost of capital employed. And how do we get this cost of capital employed? You take the cost of capital multiplied by the opening or beginning written down value. Beginning written down value. Now let me ask you a question, my good students. Are you able to see our profits of the firm? Robert amenda wapi, contribution income. No. We don't talk of contribution, it's income actually. Yeah. And you're right. In this case here, when we zero down to this profit, Joseph winning, it shall be the operating what? Operating profit. It shall be the operating profit. When we continue with this, we shall see it shall be the operating profit. Thank you so much. So are you able to see the firm's profits? Oh yeah. Akita wataka kuniongelesha lakini sawa. Ni sawa. Ni sawa. Has this examiner given me these profits? What are you able to see there, ladies and gentlemen, as our profits? 600. The first one is? Oh yeah. The 700. Hebu tuende pole pole, tuende pole pole, tuende pole pole. So tuko na year 1, year 2, year 3, year 4, year 5. Sizimeisha namna hiyo? Aya, asante sana. So katika these years, if you look at some table there, they have given me where to start from, because this examiner is nice. He's a nice examiner who is wishing me success. They don't want me to keep on repeating these things. So if I look at my past paper, are you able to see sales revenues? Yeah, they have given me revenues. Great. They have given me revenues. So revenue menipatia ngapi? Somebody in shillings thousands? 700. Ya pili ni ngapi? 600, 500, 400, 300. What have they given me there? They have given me contribution margin ratio. Wameitaje? Msomi kizungu wameitaje? Average contribution to say sales. Nikawaambia hii kitu inaitwa CMR ni sawa na CS ratio. CMR, contribution margin ratio, ni sawa na CS, what ya CS ratio. So umetupatia CS ratio, contribution to sales ratio, umesema ni what percentage? This is 40%. This is 40%. So if contribution ratio is 40%, what will be the variable cost ratio? 60%, because the two must always add up to who? To 1. The two must add up to 100%. So there are two ways here. Kama ni mimi hapa naweza ngaria examiner paka nipatie award ya AMA. Naweza kuja namwandikia hapa oye CMR plus VCR equals what here? Somebody equals 1. Contribution margin ratio plus variable cost ratio equals who? Equals 1. Meaning that the variable cost ratio will be 1 minus who? Niko peke yangu lakini na overcome tu. 1 minus CMR, isn't it? Which will be 1 minus 0.2, which gives me 0.2. Somebody here, 6. Wanafunzi wa online, oye, have they been able to follow up to here? Abracadabra. Yeah, thank you so much. So this is one of the approaches. So I'll be able to come now here and give my examiner the variable cost. I'll give the examiner now the variable cost. So variable cost umeniambia ati ni 60%. So 60% of revenue. 60% of revenue. 60% of revenue. 60% is the same as 0.6. 0.6. So mwaka kwanza variable cost takuwa ni 420. Huyo ameanza kuchoka. 0.6 times 600. 360. 360. 0.6 times 500. 300. 0.6 times 400. 40. 0.6 times 300. 180. So you come and do your abracadabra. The abracadabra is to subtract. And when you subtract the figure we shall be getting, we shall contribution margin uongo. In the total contribution, because you see, this is total rate. You see, contribution margin is the same as contribution per unit. Ama kamoja. So you tell namna gani somebody total contribute? Itaitwa total contribution. Total contribution. Because ingekuwa contribution margin, kama ingekuwa ni selling price per unit, variable cost per unit, then you get contribution per unit. What do you call contribution margin? What do you call contribution margin? So abracadabra, the total contribution, 700 minus 4, atu kinyamaza mimi naona answer hata. 280, eh? 280. Thank you so much. 240, 200, 160, 120, isn't it? Yeah. So once we get total contribution, of course, we are calculating a residual income, we'd want to get profits. So how do we convert contribution to profit? We deduct fixed cost, isn't it? Don't forget our formula. Profit, in this case here, is CMX minus who? Minus fixed cost. So andika hapo fixed cost. In this question, how to patia fixed cost? In most cases, watakupatia fixed what here? Fixed cost. In most cases, watakupatia. Hii ndio swali shaona peke yake. Ama mimi ndio sioni kwa hiyo question. Maybe mimi ndio sioni. Hawakupatia. However, then very fast, I will be able to come and subtract what here? Somebody? Depreciation as well. We must take away depreciation. And depreciation, you guys were able to get one because it is straight line basis. So we are getting 120 throughout. We are getting 120 throughout. We are getting 120 throughout like that. So then we are able to get what we call profit. Just call it profit. The normal profit. The normal profit. Thank you very much. Very nice charts here. Very nice charts here. Year 4, I'm being told that the variable cost is supposed to be 240. It's supposed to be 240 year 4. Kwani nyinyi mmendanganya? Or final answer is 240. It's supposed to be. Mbona sielewi question? Hawa wanafunzi wanasema nini? Umejidanganya eh? Ama nimejichanganya? You forgot to. Usikajali, teaching ni rahisi sana. Teaching is the best. Ni gani wanasema kuna mahali nimesahau tu. Wacha kidogo, ngoja kidogo. Wanafunzi wengi hawezi wakakuwa wrong. Hawezi wakakuwa wrong. So unaona hapa mimi nimeandikaje? Year number what? Year number 4 nimeandika? Inafaa ikuwe 240. Asante sana. Naona wanafunzi online wanajua sana. So 400 minus 240 gives me the final answer was right. Thank you so much. So online ninjas, you are the heroes. Thank you. Thank you so much. Thank you so much. So 280 minus 120 gives me what figure? 160. 240 minus 120. 120. 80. 40. 0. 0. So then we have our profits. But this profit, they would still want us to cascade it down, what we call residual income. So how do we get this residual income? The concept of COCA. The concept of COCA. So you come and mention there. Na sisi examiner zini wajanja, usikafikiria hatujui hizi initials. Si lazima tuandike vitu in full. Ukiandika tu COCA, tuta understand, isn't it? Tuta understand. Nasema tu COCA. Hata sisi ni wajanja, tulisoma kama nyinyi tu. Yeah, let's COCA. So kama ni mimi wewe, hii COCA nitaimalizia hapa sasa. Hii COCA nitaimalizia hapa. Mnakumbuka hizi beginning written down values? Hapa ndio nitakuja niandike ka title hapa, kinjaro tu. Nitakuja hapa nimwandikie cost of capital. Tunajua ni what percentage which the examiner has given us. Amesema ni 16%. So then cost of capital, it will be 16% of the opening. I'm a beginning. Opening written down who? Value. 16% of opening written down value. So abracadabra, it will be 16% times 600. Yeah. Hapa itakuwa 16% year 2 times 480. Hapa itakuwa ni 16% times 360. Abracadabra. Abracadabra, abracadabra. Life is good. Life is good. 16% times 240. Then we have here 16% times 120. Like that. All right, ladies and gentlemen, this is what we have. Today, my physical students, you have made me very, very happy. Today, you guys are very nice. Amena kwa hivyo kila siku. Ama leo ni very special. Inakuanga hivyo? Hapana, leo mmefuata sana. Leo paka niwapatie zawadi. Online guys, nime-identify a few of you who have been very, very active. Paka pia niwapatie zawadi. Wengi hamjakuwa active wengi leo online. Wala wamekuwa active, nimeona hapo kama Mike. Nitawapea zawadi leo. Zawadi leo. Na pia nitapatia yule mwenye hajaiongea tangu tuanze semester zawadi. Pia ningetaka kumjua nani. Kama hujaiongea totally, please jitokeze. Nitakupea zawadi leo. So ya kwanza inakuja ngapi somebody? 96. Ya pili 76.8. 57.6. Aha. 38.4 alafu 19.2 like that. So are you able to transfer all these COCA figures down there to profits? Yeah. So you come here. Of course, mine I will forget. Mine I will forget. But of course, the good thing is that I've got you guys to assist me. So the COCA for year one, you guys gave me a figure of 98. 96, eh? COCA for year one, I have 96. COCA for year two, 76.8. Year three, 57.6. Year four, 38.4. And then year five, 19.2. So please take away this out of what year? Out of our profits. For you to be able to give us what name do we call to this parameter? Oh, ye niko peke yangu. It is called residual who? Income. It's called residual income. Residual income. So like 160 minus 96, 64, eh? So this is 64. Thank you so much. 120 minus 43, 43.2. Thank you so much. 82. No. 22.4. 1.6. And then lastly, now for purposes of making decisions, even if the examiner has not asked you, for purposes of making, of course, we have completed this question, but for purpose of making decisions, it will be very important for you to come and give us average residual income. How do you get this average residual income? You add everything and then you divide by 5. Number of years, yes. Add everything. Add up everything and then you divide by 5. 64 plus 43.2 plus 22.4 plus 1.6 minus 19.2 equals, and then you say divided by what here, somebody? Divided by 5. Divided by 5. So average residual income equals who? 82. Are the online students able to get this 22.4? The online ninjas, are they able to get this 22.4? Online ninjas, are they able to get? Yeah. Thank you so much. The online ninjas, they are also able to get that 22.4. Thank you so much. And then with your permission, I will be able to go straight away to what we call return on what? Yes, somebody. So give us a title there, return on investment. At least you write some note. Return on investment, at least we write some note. Return on investment. So then, of course, as we progress today, I would want to reward only one student here and one student in the online platform. So it's about voting, democracy, isn't it? So who is that student who helps the others most? You came here, you are very, very new. In high school, they would have called you mono. But this person received you very well, gave you notes. So that student in this case here has been helping others often. So today, that student, we shall be able to give them a very, very good present. And it shall happen in this case here for the online students and for the physical students. Leo sio ile sikupatia wanafunzi wale wa Maringo zawadi. Hata utakupatia siku yao, utawapatia. Lakini kwa leo, tunapatia wale ambao ni wakarimu, walikukaribisha. Ukimwambia pass paper hakuchekelei. Ukiuliza question hakuchekelei, anakusaidia. ROI, which is return on investment, measures how efficiently, see, we're doing now Roman 2, isn't it? If I were you, I would have written there Roman 2, and then I say ROI measures how efficiently a division uses its assets. How a division uses its assets to generate profits. How a division uses its assets to generate what? Here, somebody? Profit. So are you able to write for me the formula of ROI? Let's see. Let's see whether you'll be able to write that formula very effectively. The formula of ROI. Let's see the formula of ROI. So the formula of ROI, ladies and gentlemen, the formula of ROI, return on who? Investment. We normally talk of operating, operating profit over what? Here, somebody? Capital employed or investment, isn't it? Or in this case here, opening what? Here, somebody? Written down value. In this context, our ROI formula in this context will be operating profit, all over opening written down value. Whatever we shall get, we multiply this with what here? With 100, yes. Whatever we get, we multiply this with 100. Whatever we get, we multiply this with 100. So for now, just use the word profit, instead of operating profit. I'll be bringing out the differences in our next class, but for now, just use the word profit. So we happen to be having, my good students, my very good students, we happen to be having a profit here. And we have opening written down value. Opening written down value. So we have 1, 2, 3, 4, 5 like that. So profits, you guys can give me the profits, right? Already you have them. So year 1, what do we have there? 160. Year 2. Year 3. 80. Year 4. 40. 0. How about opening written down values? 600 here. 480 there. 360 there. 240 there. 120. 120 like that. So then you will be able to come, ladies and gentlemen, here and provide a column for return on who? Investment. Where basically you take like year 1, you take 160 over 600 times who? Times 100. Times 100. Yeah, right. Times 100. Which then will be able to give us a what figure? Oh, yeah. 26.67, 26.67%. We go to year 2, 25%. Already I've shown you how to get it, isn't it? Then we go to year 3, 22 point. Oi, Marion, umebaki nyuma. Maana kuzuia, inaweza kuwa nazuia Marion sana. Si ni kweli? 16.7%. 0, the last one is 0. So then what will be the average ROI? Add the 5, divided by 5. Even 0 is a number. Even 0 is a number. So you take 26.67 plus 25 plus 22.2 plus 16.7 plus 0. Whatever you get, you say divided by what year? By 5. And then you give us the average ROI. So our average ROI will end up 18.1 something. So the online ninjas, what are they telling me there? The online ninjas, what are the online ninjas telling us? So the online ninjas, what they're telling us, I would want to expand this to become big. How was I expanding this? My God. 18.11, isn't it? If I try touching this, it doesn't expand. I want to make these comments bigger. Do you know how to do it? Is it this one? We know. We shall overcome. 18.1, 1 like that. 18.11 like that. So now I would want to give you an example. Remember, we said we are going to do an exam tonight, which I'll go with 2 mark, right? The online students will be able to do what here to share this on my WhatsApp group. I mark. Now I've started marking and you'll even see, I will start giving you lots of questions now to do in your WhatsApp. Kutoka leo hakuna mchezo sasa. Leo sasa ndio tumefika half term. Ile half term serious sasa. Hata kama ulikuwa na mchezo, sasa lazima uache, uanze kazi. Tatuma hii kwa group. Tatuma kwa group. I can't see the question. Tatuma kwa group. So this question, you should be able to do it before we meet in our very next what year, in our very next class. Tatuma kwa group zote mbili. Ya physical, now ya online. Is that okay? Very good. So then let's now vote for the very best student in terms of helping others. The very best. We start with I display the whiteboard, okay? I always strive to do what here to answer all your questions because I don't want to be a snobbish teacher. I don't want to be a snob. And whenever you see I'm not able to answer a question, chances are I haven't seen it. Yeah, so that is it. So the online student, who is that very aggressive colleague on Zoom, on WhatsApp? They're always giving you questions. When, for example, you ask things and the things are becoming very hot there, they go ahead and, reduce the tension by telling you we shall overcome. Who is that very best person? Who is that very best person? They're not voting for the very best person. They're not, don't vote for yourself. Marion, which Marion is this? Is it this Marion? I vote for Marion. Don't vote me. I vote for Linda. Jane Airo, wow. Robert Lagat. Guys, Aki, how comes I'm warning Margaret? Marion, yes, the one there. Okay, Linda Obura. Wow, okay. Linda Obura, not today. No, asiyekuwamo laki alifanya nini? So vote kwa wale ambao kwa class hizi. All right. So the physical students, are you voting for her? Marion. Great. So then Marion will be able to get 13,000 shillings. These are $100. Yeah. Usipatie, nilikwambia kama ni mwanafunzi aggressive, utapata pesa mingi sana kutoka kwangu. Ukiwa very aggressive, utapata pesa mingi sana kutoka kwangu. Yeah. So we have Cyprian amevotiwa pale. We are finishing this in the next 1 minute. Pesa ngapi? Itakuwa 13,000, yeah? 13,000. So tukihesabu hizi votes, unaona kama nani ameshinda? Si ni Airo? Tukihesabu hizi zote nani ameshinda? Ni Jane, eh? Lakini sasa kuna mwanafunzi anarudia Jane mara mingi. Pro. Hawa wanaharibu game. Aha, hebu tuanze kuhesabu vizuri tena. Airo, I think it's Jane Airo, right? So, it is Cyprian. What if we take Cyprian and Airo and then we divide the amount into exactly 2 parts? Will that be fair enough? Jane and Airo, isn't it? Ni mtu mmoja, eh? Lakini sasa kuna pia huyo Cyprian. Mario na shakula yake wewe, ama ndambuki wewe namna gani na Mario wewe? Wewe ndambuki wewe. Ashapata pesa yake tayari. Make sure umepatia huyo jamaa. Tampea kidogo, eh? Amekutupigania sana. No, we share all of us, Yasmin. You see now 100 and something, 13,000 shillings, 100. Kila mtu atapata pesa ngapi? 13 bob. Yeah, it doesn't make sense, isn't it? Only 130, eh? Mario na ipe yule nani huyo? Tena mnale change majina. We shall overcome. Linda Obura hana bahati leo, utamweka punch. very active. So then I'll be able to share those two amounts. I mean, that amount to the two students. I know Cyprian and I know Jenairo. Otherwise, thank you very much. Keep on helping each other. We should be able to overcome all of us. And bye-bye. That's been nice hosting you. All right. Bye.